Today we're talking about 3 simple rules to follow for better trading decisions. Stay tuned.
3 separate devices. This is one device.
Associate with people who are better than yourself and act.
I'm going to make him an offer, Captain.
Hey everybody, I'm Sam and this is Verso. Today we'll try to figure out a simple strategy that we can follow when we are trading our investments. And by trading, I mean buying or selling, the act of buying or selling our investment. And I won't be talking about, how to actually make the decision if you want to buy or sell, but just the act itself. And the thing is that the actual trading is much more a psychological barrier and a problem than it is actually a fundamental game of facts or numbers. And there is a big problem in that because the rules I'll tell you about and the things that we actually need to fight in order to be successful are very simple, but they are very hard to do because we are herd animals, right? We are social animals and we have a herd mentality. But in order to actually be successful in trading, we have to fight our own human nature, our own human psychology. You have to detach yourself from the herd mentality and go against it. You have to detach yourself from the emotions that you feel towards your investment, towards, the environment around you, and even towards other people, whatever other people are telling you about your investment, or just in general, you might be in a fight with your spouse and, you might be angry. That shouldn't affect your judgment. And that's very, very hard to do, even though it's simple to say, right? And, if you ask someone, probably most people will tell you, buy low, sell high, and you'll be fine. But it actually is a little bit more difficult than that. And, if you've tried to trade some kind of stocks or whatever investment, then you probably have found that out. So the first thing I want to talk about that we need to fight with all our hearts and minds is called fear of missing out. And that's something that a lot of people are talking into cryptocurrency society, but it is very true whatever you're looking at. And the fear of missing out is when you have made a decision that probably some kind of stock or investment is good for you and you want to buy it and you're trying to time it. So overall, I wouldn't advise timing an investment, okay? If you feel that this is a good investment, just invest your money into it. And if you're trying to time when to buy and you see the investment just rising and rising, the fear of missing out will urge you with the herd mentality to say, oh my God, that's been going and I've been waiting and I've been missing out gains. So let me buy. And you buy, and then the next day correction happens and it goes down 20% or 30%, and you feel like the stupidest person on the world, right? Well, yeah, that's a problem. So never buy because you fear that you're missing out gains. Buy based on fundamentals and thinking for the long term, because if you buy based on fear of missing out, then on the next day when correction happens and things start to go down, you'll be like, oh no, I didn't make a good decision. You lose confidence, which is something absolutely very, very vital in investing, and then you start following the herd mentality, and it's a psychological game. You don't even realize how you get into that. And once you start following the herd mentality, we get to our second point, which is never sell because of fear. Because fear is very contagious. People start talking to you, this investment is bad. If you've noticed that all the bad news start coming out after a stock starts to going down, right? Something happens, your investment starts going down, and then there is all those bad news all of a sudden coming out and nothing good, and it starts going down. That's contagious, and people with herd mentality start selling, so it goes even lower. And then obviously bots and financial institutions are selling too, so it goes even lower. And it's very contagious. And if you follow that, you start selling because of fear, and that is the worst decision that you can make. If you have investment for the long term and because of fundamentals, the short-term fear doesn't affect you in any way. Just shut it down, don't pay attention to it, or pay attention to it, but you really have to have very strong mentality. So to formulate, the second thing that we should fight is absolutely never sell on a loss because of fear. I would say absolutely never. If you have to sell on a loss, it has to be because something absolutely fundamental has changed with your investment. For example, you have invested into a company and you're at a loss, but something absolutely terrible happens. They lose their product, their CEO goes on a rampage, whatever happens. And then yes, you probably should sell on a loss, but never sell because of a fear. And I could expand that and say, even if you have a gain, never sell because of what other people are talking, because of sentiment. I would say absolutely the opposite thing. Buy the fear. And then there comes, the most famous quote of Warren Buffett, right? Be fearful when others are greedy, or in other words, don't buy on fear of missing out, and be greedy when others are fearful. In other words, buy the fear. Buy when prices start to go down because of some kind of sentiment instead of fundamentals. And that is a very important thing. And that is absolutely applicable even to more speculative investments like currencies, for example, because sometimes there are a lot of news that might appear and then prices start go down, but that's absolutely fear that basically changes nothing into the macro perspective. By the fear. So always go against the herd mentality, and that doesn't mean to buy shit investments, right? But just think about it and be smart about it. And the last thing, but probably the hardest of them all, is don't be greedy. I mean, if I can make one slogan that I would like for the whole world to see and to remember, is don't be greedy. And that's very hard, and it's very hard for me because, you lose it. There is this excitement, that happens when you're on a gain, and you just lose it. And how can we actually apply to our investments? Well, if you have bought and you have a good gain, in a stock that might be 30, 40, 50% in some kind of other investment, I don't know, if you're in cryptocurrencies, that might be 100, 230, 300%, whatever it is. If you've invested into something and you have set some kind of a window that you think that is a good profit and you're somewhere around that, let's say it's 50%, don't be afraid to take some profits out. Don't be greedy. Don't leave all your investments into the same place, even if you're not sure that it will keep going up and you'll be like, it's going up, maybe I can make some more profit. And how to actually decide where we are selling because of fear and when we are holding because of greed. That's a very important thing. You sell on fear when things start going to shit, and you're staying because of greed when things look amazing. And that's very applicable to bubbles, right? And we'll look at the charts in a second. But bubble happens and you're riding it, you have an amazing gain. Don't be afraid to take profits. And I would say, in order to find the best time for this, is always reevaluate your position on some kind of set milestone. Let's say on every 10% gain, look at the numbers one more time, look at the ratios, look at all the fundamentals that you take into consideration when you're investing into a stock. Detach yourself from any kind of emotions and just decide, would I buy the stock now at this price for the first time? And if the answer is absolutely yes, then okay, probably stay into your stock or whatever investment. And if you see that there probably is more upside, but you're not as sure as before, take some profits and leave the rest in so you can see how things are going. And if you say, okay, it's a bit overvalued now, probably I should get out, just get out. It's never a bad thing to make a gain. So to summarize, the 3 rules that we should be following when we're trading our investments is: never buy because of fear of missing out, and be careful when you're buying on an uptrend, because you might have to be more fearful when others are greedy. Number 2 is buy the fear. When something is going down because of sentiment and because of fear and not because of fundamentals, buy the fear. Be greedy when others are fearful. And the third thing is, do not be greedy with your own investments. When you are making a gain, do not be greedy, do not be blinded by the profits. Detach one more time of any sentiment and emotion for your own stock, reevaluate, and if there is more room to grow and it is still undervalued, maybe leave all your money in or leave 80%, whatever you decide is good. If you see that maybe there is more upside but it's not as clear as before, maybe take 50% out or some kind of amount of the gain and leave the rest to see how it develops. And if you see that's overvalued and you made a good gain, just get out. That's it. And let's look at the charts. And I've opened S&P 500 chart from 1991 to 2018. And we can see those trends very, very good. If you invested back into 94 or 95, you're rising up, you're making good profits. Maybe don't be afraid to take some profits out, right? And then there is something happening, big fear, right? Never sell because of fear itself, right? So here we're going up, and in the same time, buy the fear, okay? We're going up, don't be afraid to take some profits out. Something is happening here, and that's the dot-com bubble basically. But once more, don't sell because of fear, because even if you bought at the absolute top at 2000, you can see that you'll be making money in 2013, and that's a lot of time obviously and so on, but it's better than selling here, then buying back high, then selling again, and then you're actually losing money instead of making money, right? So one more time, buy the fear. Don't buy on an absolutely uptrend just because of fear of missing out. Always evaluate, and then don't be greedy. You can see what has happened into the last 2 years. It's been crazy, the upside. It's never been such a big upside as in the last 2 years. So probably don't be afraid to take some profits out. That's what just the chart is saying. Nasdaq, the same thing. You invested back into 98, that's the dot-com bubble, you're making crazy money. Well, probably it's starting to get overvalued. You probably should be getting out of your position or maybe just reducing it. Don't be afraid to take profits out. Don't be greedy, right? At the same time, it's going up like crazy. Don't buy only because of fear of missing out. You might have to wait an year or two, but then you might be able to buy it for much cheaper, right? And as we can see, from 4,500, it goes down to 1,100. So that's crazy. That's crazy, right? And then one more time, a what of fear, buy the fear. And we can see how that develops. So overall, that's my simple strategy when buying or selling an investment, and it is simple, but it is very hard to do. And the most important thing I want to focus on is always, I would advise for long-term investment, based on fundamentals. And when you're doing that, don't try to time the market. So, take a grain of salt with the fear of missing out. Obviously, all of those things have nuances and are depending on the exact situation that you're in, but don't try to time the market. Don't try to sell because of fear of others, because you think that you'll be able to buy back again. Do that only if you're a seasoned trader, and if you're a seasoned trader, you probably are not listening to that. So that makes sense. You have to detach yourself from all the emotions, and that's a very hard thing to do, because people, we are social, we are emotional. I hope this episode helped you to understand what's really happening, and hopefully will make us a little bit more gains. Stay anti-versal on the path to greatness.